Welcome to Crypto West Coast, where we discuss crypto from a Canadian perspective. My name's Damien, and today we're going to take a look at the recent volatility in the digital asset space. Before going any further, I just want to remind you that what I say is for educational purposes only, and it is not to be taken as financial advice. Also, if you're not familiar, there's always scam ads going around YouTube, and this particular one has Elon Musk speaking with the headline saying SpaceX coin launched by Elon Musk. There's no such thing right now as a SpaceX coin. And often they have famous people like Elon Musk on these videos, and they're hoping that you'll click on them and send them some of your cryptocurrency. So please be aware and don't send anyone your crypto. As I said, there's been a lot of volatility this week. So if we take a look at CoinGecko, we can see that almost all of the assets have followed the general shape of the Bitcoin graph, which demonstrates that Bitcoin continues to drive the market. Since Bitcoin is the driver of the market, let's zoom in and take a look. Zooming in on the 7-day, we see the volatility of Bitcoin, which is normal. It has ups and downs. And moving to the 14-day, we see that Bitcoin has traveled in a downward trend, which makes sense since hitting its all-time high of $65,000 US on April 14th. And I often speak in US dollars because I use Binance and Celsius Network, and all of these platforms use US dollars as their base currency. In the past 30 days, we see that Bitcoin has continued this downward trend. In the 90 days, we see that the trajectory is more flat, just slightly lower at the end of the 90 days than at the beginning. But when we get to the 180-day trend, we start to see that there's volatility, but the trend is upwards. And when we take a look at the past year, the Bitcoin trend, although volatility, is in an upward trend. And finally, if we look at the whole history of Bitcoin, we see that although volatility, Bitcoin has continued to go in an upward trajectory over all these years. If the digital asset market has taught investors anything, the motto, when in doubt, look out, has so far been the case for Bitcoin, the driver of the crypto market. So far, Bitcoin is doing exactly what it's supposed to be doing, and you can find a video I made right here. Since Bitcoin's introduction to the world by the anonymous creator or creators going by the pseudonym Satoshi Nakamoto in 2009, the programming protocol for Bitcoin, which rewards miners in Bitcoin for adding the new block onto the blockchain containing the latest transactions, gets cut in half every 4 years, also known as the Bitcoin halving. So far in the Bitcoin cycle, every time there's a Bitcoin halving, Bitcoin then goes on to an all-time high. Here in CoinGecko, we have the maximum time frame, but if we slide these sliders, we can zoom all the way back to 2013. And so the first halving took place on November 28, 2012, which isn't on this chart, but was followed by the all-time high on November 29th, 2013. And if we see here, we zoom in, there was its all-time high. The second halving occurred on July 9th, 2016. So if we slide the slider, we can get 2016 in the view, and we can see that the all-time high followed on December 15th, approximately 1 year, 5 months later. Now, just looking at the graph like this, the first all-time high just looks like a little blip compared to the second all-time high. And if we slide the slider and just focus in on the second halving, we can see that there it is, December 15th, it hit its all-time high. But look how there was volatility leading up to and after that all-time high. The most recent halving occurred on May 11, 2020. And the question is now, have we hit the all-time high, which is the purpose of this video? Another site you can use to track the prices of digital assets is TradingView. This is a free application, at least for beginners like me. All you need to do is sign up for it. And many YouTubers use this to track the prices, and I often follow along with them. Now, if I'm not sure what chart they're looking at, I look up here, you go to the search bar here, and type in what you see they're looking at. So in this case, I'm looking at Bitcoin, BTC, and US dollars. And then we have the Bitstamp, the Coinbase, the BitBuy, etc. that we're clicking on. I think I'm using Bitstamp here. So here is Bitcoin over its history. And there's the blip, the first all-time high of 2013. Here's the second all-time high in December 2017. And if we keep going, here's our current place that Bitcoin is in. Oh, and by the way, I'm looking at the weekly. We'll move to the daily. So here's the daily and the Bitcoin's history. And if we zoom way back here, right there, that little bump that's hardly visible was the 2013 all-time high. Here's the 2017 all-time high. And if we keep going, here's where we currently are. But I just want to show you the volatility in today's market, the ups and the downs, is not so different than the volatility in 2017, where there was plenty of volatility, some really big up days followed by some down days. And even when it hit its all-time high, it dropped very quickly and then pushed up again, and people were unsure if it was going to go any higher or if it was going lower from here. And as it turns out, it went lower. And that's where I think we are today, wondering, did Bitcoin hit its top, or is it going to push up higher from here? So who are the people who are not too concerned with this volatility right now? They're probably the people who have invested for a while. They've probably dollar cost averaged their way into assets. And if you don't know what dollar cost average means, it's buying into coins on a regular basis, maybe daily, maybe weekly, maybe monthly, a little bit at a time, buying when the price might be a little bit high or a little bit low, but overall they get a good average price. Could be the people who are hodling, and hodling has two meanings. One, it's the misspelled word for hold, and two, it could stand for hold on for dear life. All of these people likely have something in common. They believe in the technology and where digital assets are going, and they are willing to ride out any volatility. Those who are panicking right now are likely the ones who got into digital assets recently, buying at the top, likely FOMOing in, spending more money than they can afford to lose when investing. Perhaps they watched one or two TikTok, YouTube, or Facebook postings claiming that a certain coin will go to the moon, only to see the money they put into a coin lose its value, sometimes over 50% right now. If they spent their rent money or mortgage payment on a coin that was supposed to go to the moon, only to see its value come crashing down, they're left with two tough choices. One, to sell at a loss, thus breaking the rule of buying low and selling high, or two, to hold on to their coin in the hopes that the market will turn around and it will regain its value. Regardless of the camp that you're in, whether you are not too concerned of the volatility or you're panicking, but you believe that digital assets are the future, the new frontier, the internet of value, then I encourage you to stick with the game plan of dollar cost averaging into coins that you believe in, and that you've done some research. You buy the dips and you take profits when the coins that you have purchased hit certain milestones, like a 3x or a 5x or what have you, and you take out your initial investment, and the rest is sheer profit. In a recent interview on Crypto Banter, and I'll add the link down below, Raoul Pal, who is the co-founder and CEO of Real Vision, the world's preeminent financial media platform, which helps members understand the complex world of finance, business, and global economy, said that in this volatile market, I'll tell you what, I'll let him speak for himself.
The reason why you don't trade, is that because you fundamentally are taking a view and you don't think that you can outsmart market timing, or is it just because you don't have the bandwidth?
Actually, having run hedge funds and traded a lot my whole life, in a market like this that's very volatile, you tend to screw it up by short-term trading it because you get stopped out when you should be adding and stuff like that. So I know if something's going to go up 10x or 20x or 50x, what's the point in trying to eke out even more? And it just frees your mind that you can just leave it. It's different if you think, oh, it's going to go up 10% this year. Can I turn that into 15%? That's a whole different game. It's just not worth it here. It's just like in an exponential move, just buy and hold and go to the beach.
So he suggests keep it simple. Buy, hold, and go to the beach. Traders and influencers are not perfect. They do not have crystal balls. They're simply trying to pass on to their audience what they believe is to be correct, myself included. They provide their content for various reasons, hopefully to pass on positive and informative information, but they may have alternative motives. Some may be trying to shill a coin that they have a heavy investment in, or they may have been paid to promote certain coins or projects. And then there are those who may be trying to make a living from the content they produce, and in order to attract more and more viewers, they make unrealistic or unpractical comments and predictions. We always hear about those traders who made the awesome move and made 10x or 100x on their investment, but we don't hear about all the investments that they failed at. It's the same as someone who goes to a casino and tells all of us how they made it big one night, but they failed to tell us all the nights they went home empty pocketed. Or the fisherman who caught that giant fish, but not mentioning all the other times they went out on that lake and didn't catch anything. So right now the markets are shaky. If we look at the recent movements in Bitcoin, starting in September 2020-ish, the initial uncertainty of COVID calmed down. Governments started either handing out money, as is the CERB in Canada, or started talking about handing out money in the United States, and the stock market was going up. Michael Saylor of MicroStrategies began to invest big time into Bitcoin, and there was optimism. Then, in February, Elon Musk announced that Tesla would be putting Bitcoin on its balance sheet. Then the meme coins such as Doge and SafeMoon started to pump, and more investors piled into the crypto marketplace. Also at this time, Bitcoin dominance began to fall below 50%, which was an indicator in the past that when this happened, the crypto market was heading for its new all-time high, and I did a video on this. Then in the middle of April, things started to change. FUD came out that Bitcoin mining is bad for the environment, and I did a video on this. Then the news that Tesla was no longer going to accept Bitcoin, and the news that China was banning Bitcoin, which was not new news. These statements have been coming out for years. The price of Bitcoin began to fall, and because there was so much hopium in the market, investors who were over leveraged had their margin calls liquidated, causing the price to further fall, and this brings us to where we are today. So what happens now? As I have said, every YouTuber, TikToker, Facebooker, and influencer does not have a crystal ball, but if you listen to enough of them, you'll get a general feeling of where they see the market is going. The majority do not actually feel that the peak of this cycle has happened. For one thing, the time between the Bitcoin halving and the all-time high has only been a year, and it should, according to past history, be expanding. Another is that the altcoins really did not go parabolic as they have in the past. And another is there are many more investors in the digital asset space this time round, particularly institutions such as MicroStrategy and Tesla, to name a few. So, if you are an investor in this digital asset realm, there really is not much for you to do except to just wait for things to calm down and do as Raoul Pal said, buy, hold, and go to the beach. Right now, listening to the sentiments of other influencers, Bitcoin is now leading the market. If Bitcoin goes up in value, the altcoins will follow, only in bigger percentages. And if Bitcoin drops, so will the altcoins, only in bigger percentages. Investors need to be realistic. Most of the top projects, including the top 50, when we look at CoinGecko, coins like Bitcoin, Ethereum, Polkadot, Cardano, Binance Coin, Chainlink, Theta, VeChain, Luna, and so on, are not going to the moon anytime soon, nor are they going to go to zero. So according to some of my go-to sources, if you plan to make an investment in some of these coins, to wait for the market to settle, to see where it's going to go, and then begin to make purchases once that happens. This is not financial advice, but if you've been considering beginning to invest in digital assets, now might be a good time to set up an account with a Canadian exchange, and I made a video about this and you can find it right here. You can make a small purchase of say $100 in Bitcoin and Ethereum, maybe $50 each, just to get comfortable with it. With all of these digital assets sitting at a much lower value than they were a month ago, this might be a good time for you just to get your toe wet. Of course, the market may continue to take a dip, so by just setting up an account and moving some money into that account, you will be ready to purchase some of those digital assets when the time is right. Despite the recent downturn in the environment, there has been some positive news coming out. PayPal announced that their customers will be able to take custody of the digital assets that they have purchased on their platform and move them to their own wallets, which has not been possible before. Apple is looking to hire someone with cryptocurrency experience to launch a new alternative payments program. And ARK Investments CEO Kathy Woods, who are heavily invested in digital assets, states that it is impossible to shut down Bitcoin and regulators will become more friendly eventually. And regardless how the market is doing, there are always ways to earn yield on your digital assets. Besides the popular assets of Bitcoin, Ethereum, etc., stablecoins such as USDT and USDC can be purchased through some exchanges and moved to platforms such as Celsius Network, which I use, BlockFi, and Binance, where you can earn yield or interest on these coins. Since I use Celsius Network, I will point out the annual percentage yield, the APY, for the coins that are offered. And you can see here, these are the APY, the annual percent of yields of the coins. They have two columns. If you earn in their native token, the CEL token, the percentages are slightly higher than if you earn in kind, which simply means if you invest Ethereum, you will earn Ethereum. And I have it on the international tab since that's where I am from. But you can see as I go down the list, the coins that you can earn yield on, some are quite large. Matic right now, 10.51%. And you can see all the coins here on this page. On this page, there's the two stable coins earning 8.8% if you earn in kind and 11.21% if you earn in the Celsius token. Pax Gold, which is digital asset backed 1-to-1 to gold. So that's one way to invest in gold if you so desired. And the third page showing the rest of the coins that you can earn yield with in the Celsius network. Of course, this is not financial advice and you need to do your own research. But if you want to open an account with Celsius Network, you can use my referral link, which is down below, along with links to the Canadian exchanges that I've used in my Canadian cryptocurrency exchange chart. So, as I wrap up this video, traders, investors, and observers of the digital asset market will keep their eye on Bitcoin and to see where the market is heading. If Bitcoin drops below $29,000 US, there are not many support locations other than the previous all-time high of about $20,000. If Bitcoin can break the $41,000 to $42,000 level, then it could go on to make new higher highs, which is what most of us invested in this space are hoping for. And finally, there is the 2021 Bitcoin conference in Florida next week, so who knows what will happen to Bitcoin with a renewed focus on it. Thanks for watching this video. I hope you're in the non-panicking camp, and I hope to see you in the next one.